Good day to one and all. This is Dr. Sivaraman of iknowintersys.com. So I'll be presenting the Asian Session Live Market Analysis webinar, explaining the derived forecast for this week and also the levels in which the currencies are expected to make the swings. And also we will find out how we can do the market reading and also use the effective trading strategies in order to limit the risk and maximize the profit during our trading decisions. So I'll be giving, first of all, the expected market moves for this week, 27th to 31st of October. And today we are on 27th, Monday, between 5 and 5:30 GMT. I am giving the forecast and we will try to find out how exactly the market is making the moves in tandem with that of the expected market moves derived from that of the forecast. So I'll just show you the forecast slide. Now we have come to that last week of the month. 27th to 31st is the last week of this month of October. So whenever you come across the week ending, showing the ending of the month, and the week showing the starting of the new month, the next week. So both the weeks will come across the monthly trend reversal moves. So both this week and next week, 4th to 7th of November, also will come across the market showing very volatile moves without showing any directional move. So we will not be able to assess whether the market is on the downtrend or on the uptrend. And that sort of moves they are expected to make. They may pretend as if the market is going to go up and then drop. Then it may appear the market is going to drop further, then they will rise. And they could make some aggressive moves during this time in order to earn as much as possible from that of the traders when they see frequent surprises. So whenever the traders follow the technicals and take the positions, the players give the surprise to them. And probably they may simply use the fundamental as an excuse, and then the traders get trapped and stop out. If not stop out, then they go in for the margin call. That sort of moves are expected to happen during this particular fag end of the month. So today, 27th of October, they are expected to make the higher level swing and then slide and then swing and firm up during that of the European session. Then swing and slide is expected during that of the US session. If you look into that of the market timings, you find that the daylight saving system is switched off from yesterday in Europe and UK. So as a result, you find there is a change with regard to the three sessions which are followed by that of the players. So 0030 to 7:30 GMT will be the Japanese session. Instead of 7 GMT, now it will get over by 7:30 GMT. Then 7:30 to 8 will be the gap time. Then European session will start by 8 GMT. But closing will be as usual 13 GMT because still US has not adopted the standard time. That will come from the 3rd of November. So next week onwards, we'll come across US session will start by 14:30 GMT. In this week, you'll find European session will be of a shorter duration. Then tomorrow, they are expected to make the swing and slide during the Japanese session, followed by the swing and firm up during European and swing and slide during US session. Then they are expected to make the dip and firm up move during that of the Japanese session on 29, then swing and slide, and then swing and drop. So for month end, they are expected to make the fear creating downward move in the case of Euro and GBP, and also in the case of USD Yen. So thereby, the traders will find that the market is showing predominantly US dollar gaining move. So immediately everybody will start taking their sell positions. And you know that the traders holding long position now feeling that the market is bullish will liquidate the long position and turn short sellers. So as a result, once they all predominantly take sell positions, the players hold the market and later on firm up. And that is what they are expected to do in this particular week and also the next week. So they create the market sentiment, and within the week they will try to reverse the market. And also during that of the monthly trend reversal move, they will do the sequential trend reversal. That is, they will handle the commodities and the commodity crosses to start with. There is USD CAD and Australian dollar will make suddenly big moves, and then followed by that the yen crosses. At the time you will find the contrarian move happening, that Euro, USD yen and GBP could make a downward move, hit all the stops in yen and yen crosses, and then subsequently firm up. That sort of moves they are expected to do it in the case of yen and yen crosses, and then later on the majors, that is Euro, GBP, USD yen and USD CHF, they will try to make the USD gaining and the USD weakening move. Then followed by that the European crosses. Then they will make the contrarian move. Euro drop, GBP rise, or Euro rise, GBP drop. That sort of moves they will try to do it. And that is mainly to handle the European crosses. That is how they are expected to make the sequential trend reversal this week as well as next week. So don't aim to do any sort of position trade during this time, and try to focus only on that of the swing trades. So especially when you take a position following the session-wise move, you try to close the position within the sessions and grab the profit and try to build your equity. And then later on, from the second week of November, you can do the trending move. Once the trend is set, it will become visible, and later on, you can try to take the positions. The trend is expected to be upward from the second week of November. But till that time, they will try to bring in the downward move, and they may try to revisit the lows they have set during that of this particular month. That is, in the case of Euro, around 1.25, and in the case of GBP, around 1.58, and they will try to revisit. And in the case of yen, they could come down to 106. Earlier, they came down to 105.27, and now this time they will come down to 106.50 and then go up. And in the case of yen CHF, they may not drop big, and they may just hover around that of 94.75 and then start gaining the levels. And in the case of Canadian dollar, they could suddenly come down below that of 101.1100 briefly, and then go up again and start gaining the levels to that of 1.13 area. Then Australian dollar is expected to make the swings around 88.75 to 86.75 in this week and next week. So these are all the levels in which the currencies are expected to swing: 1.25 to 1.28 in the case of Euro, then 1.58 to 1.61. So the range is expected to be the same, and they will try to make. Last week they made the higher level swings and then started coming down. And after coming down to 26.26 in the case of Euro, they started gaining to 1.27 now, and again they are expected to come down. So that sort of moves they are expected to make it, and later on by fag end of the week, they could gain the levels. So kindly make a note what is the range and try to take the swing trades accordingly. And whenever they are near that of the low, they will try to do the lower level consolidation with the downward stop end. When they are near the higher level consolidation with the upward stop end. And that you have to keep it in mind. During that of the downward stop end and during the upward stop end, you can enter into the market. Near that of the high, and they make an upward stop and you can take a sell. And near that of the low, they make a downward start and you can take a buy. So that way, if you do it, you'll be able to quickly book profit. Now, coming to that of the market reading, today initial lows on the highs, 1.2672 in the case of Euro low, and 1.2714 is a high. So they are making the swings within the low on the initial low on the high. In the case of GBP also, they are making the swings near the low on the high. Around 3:30 GMT, they formed the high and then start coming down. So slowly they are coming down in the case of Euro and GBP. And in the case of Yen, they formed the high first and then came down and then formed up a little bit and start coming down now. So they are holding USD Yen and then slowly they will drop GBP and Euro and GBP as well in order to handle the yen crosses. And also they will be active in handling the commodity pairs. Keep that in mind. Then the case of USD CHF, 94.90 is the low, 95.20 is the high. They are not breached the low or the high. Then USD CAD, 1.1213 is the low, 1.1242 is the high. They are not breached the low or the high. And in the case of Aussie also, they are not breached the low or the high. So the market looks very subdued at the moment. They are not breached the low or the high. And so we have to wait for them to increase the spread to more than 40 pips between the high and the low. Then probably you will come across the actions happening in the market. And also the net changes you find, Euro is showing positive net change of 36 pips and GBP is showing 20 pips of positive net change and Australian dollar 22 pips of positive net change. And in the case of yen, 18 pips downward net change, then CHF 22 pips downward net change, and Canadian dollar 21 pip downward net change. That shows that they are making the USD weakening move to start with. Later on, they will try to make the contrarian move in order to handle the crosses and also bring in the sequential trend reversal moves. So after taking the decision of, okay, whether the market forecast says the market is expected to make a downward move. So whenever the market is closer to high, we will not cut the high for more than 30 minutes. We can take a sell position during the early part of the session, wait for 30 minutes. And if they don't breach the high and near that of the high, then we take sell position and try to close it during that other downward move they make during the later part of the session. And also we keep the hedge order to limit the risk, 30 pips hedge order. And once the position makes profit, we keep stop at entry and remove the hedge order so that the hedge order will act instead of a stop. And once we are able to keep stop at entry, we remove the hedge order so that there is no more protective order required other than that of the stop at entry. Once you keep stop at entry, the event if it is hit, you don't lose any money. And that is why we keep stop at entry so that we don't take any chance. Then later on, once the position start making profit, we use the trailing stop in profit making position and try to maximize the profit when the going is good. And also we keep about 45 pips as the limit order to start with. If the market swing is low, then they don't breach the high or the low and things like that. If they start breaching the high, breaching the low, and widen the spread between the high and the low, then we try to keep about 75 pips. Then we will see that 75 pips limit order will be filled. Simply keeping 75 and telling that it is not getting filled is not appropriate. We have to find out what sort of swings they are doing it. If they don't make the swings, that means the market volume is relatively low. So when the market volume is relatively low, there is no point in making swings in the market. That's what the players try to do it. And so in order to attract the traders, they make small swings. And later on, they try to make visible swings and try to make bigger moves in the market. So we need to understand how they are making the swings, and then accordingly, we have to take the position, sell near that of the high or buy near that of the low. Once they increase the spread between the high and the low is more than 40 pips, so that the momentum will happen in the market. Then there is a scope for us to make money. Now, this is what I was explaining to you. Now, since the daylight saving system is switched off in Europe and only daylight saving system is on in US, you come across the condition like this. Now, Japanese session is getting extended from 0030 to 7:30 GMT. So earlier, the late Japanese session will be from 5:30 to 7 GMT, but now it will be 6 to 7:30 GMT. Then 7:30 to 8 will be the gap time. And from 8 to 13 GMT will be the European session. So European session will start 30 minutes past the earlier time frame, 7:30 GMT. Instead, now it will be 8 GMT. Then 8 to 9:30 will be the early session. 9:30 to 11:30 will be the mid session. 11:30 to 13 will be the late session, late European session. So here you find that European session loses about 30 minutes in this week. And next week onwards, it will gain 30 minutes because US will start by 14:30 GMT. Then European session will get over by 14 GMT. So after losing 30 minutes here, it will gain 1 hour. So as a result, you will find 30 minutes gain in the European session from that of next week onwards. Okay. I'll answer to the questions which are asked here. If you've got any doubt, you can ask me the questions here in the chat window or the question answer window. I'll be willing to answer to those questions. Venkat Ramana has got a question. What is expected move on 29th on US Fed interest rate decision with majors? See, I already shown the expected market moves and I'll show it again. Okay, 29th is Wednesday. They are expected to make the drop in the case of Euro and GBP after the decision. So you'll come across more US dollar gaining moves on 29th. So this is actually the predetermined market moves. The expected market moves, what I give every week is a predetermined market moves. That is why I'm able to give the predetermined market move for n number of weeks beforehand, so that for several months and several years, I'll be able to give that forecast. And then later on, we have to fine-tune it using the events happening in the market or events happening in the world, and also the type of moves they are making in the market by using the market reading technique. The market reading technique will be used mainly to fine-tune it for the intraday, not for the long term. Fine-tune it for the intraday, and probably say, for example, when there is a swing and drop, and they may make a small dip here, because everybody will be waiting for the FOMC meeting, decision, interest rate decision. So in such a scenario, what will happen, dip and firm up. Instead of making a dip, it might be holding flat and may not gain also. That sort of slight variations might happen depending upon the data release. But actually, when the trend is estimated, and you would have noticed or experienced that the market is making exactly the same way the moves as estimated, excepting a small variations or deviations on 1 or 2 sessions. So that is the level of accuracy of the forecast. So you use it as a guiding factor. Still, we will not blindly follow it. We'll use it as a guiding factor and try to take appropriate trading decisions, either sell and buy or the buy and sell, by doing market reading, because ultimately market reading is going to help us, because whether they are making an extended upward move or an extended downward move, or intentional upward move, intentional downward move, or the important things. So when they make an extended upward move for 2 hours, that means followed by that will be an intentional move on the downside. So at that time, if we take a sell, we'll be able to definitely make profit. And similarly, when they make an intentional downward move, extended downward move, followed by that will be an intentional upward move for 2 sessions on the start of the 3rd session. At that time, if you take a buy, and you will find 100% profit booking opportunity during the rise. So always follow that of the extended move, and then extended move is a quick move which happens for more than 30 minutes and up to 2 hours. And once they make that move on the upside, understand the market is going to drop. Once they make the extended move on the downside, understand the market is going to go up, irrespective of the data release. Then you try to position or take the position so that you'll have 100% guaranteed profit. Because see, I can simply say that the forecast has come true and things like that. Unless and otherwise you are benefited, there's no point in using the forecast. So you have to understand the forecast is not to just say that the forecast has come true predominantly and things like that. It is mainly to give you the benefit of making money from that of the market. So understand that the forecast is 1/3 of the tool we use to determine how exactly the market is going to make the move. Then another 1/3 will be the market reading. And still, we'll use the trading strategy 1/3, and that will limit the risk. In the event, suddenly, if there is any calamity happens in the world, and the market might bring in a very quick knee-jerk reaction. So we cannot afford to lose all our money, what we have earned. No? So obviously, we'll use the trading strategy to limit the risk. So keep in mind that in trading, first of all, what you have to do is you should learn the art of limiting the risk. Then subsequently, you can maximize the profit. So it is something like when you're trying to learn how to drive a vehicle, and anybody who wants to drive the vehicle will ask, where is the brake to start with? Because once the car is in momentum, and if you want to stop, then you should know how to stop it, how to apply the brake and stop it. And if you don't know, then simply it can go and dash against something and stop. Then it will be detrimental. So obviously, you will not allow that to happen. So you know about how to stop the vehicle in the event of emergency, in the event somebody go across your car and things like that. So in such a situation, you learn first about the risk management. Then you go in for maximizing the profit. But unfortunately, what happened, many of the traders who enter into that of the trading arena with the aim of making quick money, and when they lose money, immediately they think that just because following the stops and keeping the stops, they lose money. So they avoid keeping the stops and thinking that, okay, I got enough equity, so which will hold the position for this much level, so why not I wait? This is the tendency invariably you come across among that of the traders. So what is more important is we should be able to accept the loss when it is small. But unfortunately, many of the traders accept the loss when it becomes very large and unbearable. There is a wrong approach to the trading. It is something like sitting in a car, going in a high speed, and say that, okay, let the car stop, hit the tree and stop. I will just drive the car accordingly. If somebody says that, you will say that he is a fool. He is not sane. But we try to do the same in trading. So understand that without our knowledge, for the sake of convenience and for the sake of comfort, we try to trade without a stop. And if you happen to do that way, the trading, avoid it and try to use the hedging if the hedging facility is available in your trading platform, so that the hedging can act instead of a stop. And if it is hedged and you do not know what to do with the hedge, and you can just close the hedge with a nominal loss and keep another hedge order. When the hedge position is not making profit for 30 minutes, if you follow this rule alone, you will be able to limit the risk. Not necessarily you should know about either way trading, etc. If a position is hedged and the hedging is not making profit for 30 minutes, that means the hedging was filled during that of the extended move or during a stop point. Then once you close the hedge after about 30 minutes to 2 hours, then keep another hedge order. Then they will not hedge you again. They will start making the intentional move and you will be able to really make more than that a profit what you are last in closing the hedging. So once it is hedged, you watch and close it about maximum of 2-3 pips or 5 pips you may lose. But if you earn extra 5-6 pips over that of the when the going is good, then you have the net profit. So try to see that the trading strategy is giving importance in your trading decisions. Okay, what about gold and silver? And this is a month end, so you'll come across gold and silver. They are expected to make the gain and the drop and the gain alternate moves will be seen. But ultimately, after that of the next week, they are expected to make upward move. Try to do buy and sell trade and buy whenever there is a quick drop. You know that quick moves are false moves in the market. The initial low and the initial high is still 230 GMT. Yes, there is no change as far as noting down the initial lows and the highs. Between 230 and 330, they will form the initial low and the high. So if you note down by 330 GM, that will be the initial low and the high for the entire day. Yes, European session will have only from 8 to 13 GMT, 5 hours only for this week. Then Faiz has got a question. USD CHF is expected to make a downward move. USD CHF is expected to make a nominal downward move. So probably to 94.80 or 94.75, etc. And those things are buy opportunity afterwards. They will go above that of 95, 95.20. And many people have got that impression that USD CHF is the sluggish currency, but all the time it is not going to be the same. They will try to gain more levels in the case of USD CHF. And around means only swing for the rest of the week. Today, move on Euro and GBP will be down. So as I explained that they are expected to make the slide during the Japanese session as well as US session in the case of Euro and GBP today and tomorrow. So initially there will be a downward move in the case of Euro and GBP. Later on weekend they will try to form up. And again next week they will make a drop and then hold, and after the non-farm payroll, they will try to spike up. Then Ramin, when you refer to the drop or slide, how many pips would they usually be? Normally, a dip will be for about 15 to 25 pips, and a drop will be for about 50 to 60 pips. So in order to differentiate that type of move, I am using the dip and the drop. Form up will be 15 to 25 and rise will be about 50 to 60 pips rise. In Bill, is it fair to say that the Canadian crosses will keep making the one-sided downward move? No, Canadian crosses, they are expected to make the downward move to start with, especially Euro CAD and things like that. And later on, by month end they will firm up again. And they will not make one-sided drop for a long time. They have to handle it. And that they don't do hat trick. If you follow it carefully, that means not more than 2 days they will make similar moves. And Richard, what would be your view on USD yen for this week? Is it likely to drop to 106? Yeah, when it comes to 106, 106.50 area, when they stop cutting the low for more than 30 minutes to 2 hours, you can take a buy. Then later on, they are expected to make the gaining move. Okay, any other question? Okay, fine. No more questions, I believe. Then I'll just show the expected market moves for this week. So 27th to 31st of this week, that will be the last week of the month of October. So they are expected to make initially the dropping move, and then they are expected to firm up on the last day. Then again next week they are expected to make volatile moves. So follow these session-wise moves and try to decide on the trades. Do only swing trades. Don't focus on position trade during this week and next week, because they will simply reverse the trend in the market. That is why it is called as the trend reversal time. And especially the month end and the new month beginning time, they will make trend reversal move. And also the sequential trend reversal. So they will not handle euro and GBP all the time. Instead, they may hold it and they may handle the commodity crosses to start with, commodity and commodity crosses, and later on the yen crosses and yen and the majors, and finally they will make some contrarian move among euro, GBP and USD CHF in order to handle the European crosses. So as far as the market, the levels are concerned, I've given it. You can just use it as they're all mathematically derived levels and use it as a guiding factor and try to follow it. When they come closer to those levels, you just watch and take the positions. When they don't, it has to fulfill the condition that after forming the low, you should not cut the low for 30 minutes to hours. Then you can take a buy closer to the low. And then you will find they will start gaining the levels for weekend. Till such time, they are expected to make the downward. And also do the market reading and follow what are the type of moves they are doing at each session. That is, if the session move says that swing and rise or swing and slide, that means they make the higher level swing and then slide. Swing and firm up means lower level swing and then rise. That sort of moves they are expected to make. So that is the meaning of the swing here. So depending upon the second word, you can find out where they are going to make the swing. Also keep in mind, from now, this week, you'll find the session time is changed. European session loses about 30 minutes in this week. Next week onwards, you'll find US session is shifted to 14:30 GMT. So I'll not be able to come on Thursday due to some work. And so I'll come back on 3rd of November and give the forecast for the next week. I take this opportunity to thank FX Street for the facilities provided to present the webinar. And this webinar is being recorded. You can find it under the archives in fxstreet.com and refer to it as and when required and try to take the advantage of it. So we all work in order to give you good input for you to take appropriate trading decisions. So in the process, try to eliminate the fear component and try to make decisive trades and build up your equity. Wish you all happy trading. See you next week.